Hey traders, this is Blake Morrow with Traders Summit, and with me today I have, somebody who's extremely popular in the FX market, the one and only Andreas Steno Larsen, Chief Global Strategist at Nordea Bank. Welcome. So glad to have you here.
Thank you so much, Blake.
It's really, really nice to speak with you. I'm going to say I'm a fan of your work because I am, and I try to read at least your weekly piece every week when it comes out. And as I was telling you before we hit the record button, that I was in the middle of perusing your piece, but it gives us a lot of bullet points of things to talk about, especially given today dealing with inflation data that we're seeing here in the U.S. And I guess I want to start off. Can we start off talking about inflation and you can maybe give us your thoughts about where we're at, because obviously consumers globally are starting to really take note of these inflationary pressures. So what's your outlook as far as where inflation is going, maybe, not only in Europe, but in the US and maybe globally? And how's the currency market going to respond to that?
Well, first of all, I don't think we've peaked yet. That's pretty clear. Also, when watching today's data from the US, we have a new acceleration in the monthly growth rate for inflation in the US, quite a rapid one. And we see some of the categories that actually accelerated the inflation numbers over summer starting to rebound again. But we also see a much more broad-based picture this time around, which is quite concerning to me. I think 80% of all of the subcomponents in the CPI index in the US are now running above 2% in yearly terms, which is something that we haven't seen in decades. So this whole debate on whether this is just inflation driven by a few components or whether it's a broad-based inflation, I think we simply need to mute that debate now, because it is getting broad-based. So to me, the inflation picture, at least in broad terms, is going to worsen a lot over the next 6 months.
So, when you're talking about inflation, it's I was having a meeting with some other Forex traders earlier today discussing inflationary pressures. And we were just talking about how it's been so benign in certain aspects of every consumer's life. But in other aspects, when you're talking about food inflation or maybe rents or education, if you will, those have been steadily climbing. But there are certain things that really haven't inflated much over the last, let's just call it 10 years or so, that are really starting to play catch up. And it's where it's hitting the consumer most. So how do you think these higher inflation pressures are going to impact the consumer globally, especially when you start talking about China, who's, really changed you watched them over the last couple of decades shift their demographics more into a consumer type of demographics? Do you think it's going to be a big problem for consumers moving forward?
I guess that's the biggest risk to the global outlook right now, because otherwise, I think we are staring directly into a scenario in which central banks will have to hike interest rates in response to this inflationary pressure. But if they start watching deteriorating data on the consumer side, then I guess they could flip around on their rate path suggestions once again. So this is really the key question for next year. I still hold high hopes that the consumer is actually pretty decently based right now in the US, not least due to the savings rates that we've seen over the past couple of years. The latest observation on the savings rate on a monthly basis is still 8% out of the disposable income, which is pretty good from a historical perspective. So I don't really fear it yet, but we need to see wages picking up even more than what we've already seen. Otherwise, of course, this will turn into a bad issue.
Okay, well, that brings up another topic that I really wanted to bring to ask you specifically, because if you're the Fed or you're any other central bank for that matter, and you see these inflationary pressures really building, but growth is starting to slow, what path do you choose? Because I don't think you can, well, maybe I might be wrong here. I don't think you can have your cake and eat it too. Do you fight inflationary pressures, or do you continue to prop up the economy? So, what would you think if you were a central bank head, which you might be in the next 20 years? That's why I'm going to keep my eye on you.
I don't want to be that.
But how would you fight it? What do you think, or how do you think that these central banks are going to fight it? Fight inflation or fight growth, or stimulate growth rather?
First of all, I probably wouldn't vote for a hike myself right now. I think it's a clear risk to the economic outlook if you start tightening too much into this scenario. But what I do think that central banks will do is that they will turn more hawkish during the next 6 months, probably even in a very rapid pace. First of all, due to the fact that inflation hasn't peaked yet, but secondly, also as unemployment is a lacking variable of the economic development. So when we've seen such a solid growth picture this year, we will likely see a solid unemployment picture over the next 6 to 9 months as a consequence of what happened this year. So to me, the cocktail of lower unemployment and higher inflation is pretty straightforward in central bank terms. They simply need to tighten into this.
Okay, so based on what you said, it seems like I want to say approve the way the Fed has been handling kind of slowly tapering, being pretty well as far as telegraphing what they want to do or what they're going to do, but they will have to pick up the pace in the future. Is that what you're saying?
Yeah.
Okay.
I mean, first of all, what they could do in response to the inflation pressure that we see right now is that they could increase the pace of tapering. And I think that's clearly something that they could debate already in December if the current pace of inflation continues, right? They used the inflationary pressures as the key driver behind the decision to start tapering. Yeah. So if inflation picks up even further, why not let tapering run faster?
Oh, yeah. Okay. Well, that makes sense. So then that kind of brings me to another topic I wanted to discuss with you. This year, 2021 has been kind of the year that most analysts have been turned upside down or all the way around when they're, as far as the dollar goes. The dollar was supposed to be the weakest currency, and I got it. I mean, I understood the reason why everybody thought the dollar is going to be so weak. But here we are at highs of the year, actually today, and we're brushing those highs. Why is the dollar so strong in an environment where we're adding so much liquidity? And I think I know the answer, but I would love to get your take.
Well, first of all, I think the market is very forward-looking when it comes to liquidity. So right now, we are staring directly into a scenario with a withdrawal of dollar liquidity, actually. We know that the Fed tapers the asset purchases, meaning less liquidity added per month. But then we also know that within, let's say, a couple of months from now, the US Treasury will be allowed to issue a lot of bonds again, which effectively means that they will build up their liquidity buffer at the Federal Reserve again. And in that process, withdrawing liquidity from commercial banks, since liquidity can either be at commercial banks or at the Fed. And when the US Treasury issues bonds to put money into the Fed, then they will withdraw that liquidity from commercial banks. So we should actually expect dollar liquidity to dwindle over the next 3 to 6 months by as much as maybe 400 billion. Which is quite a lot, and that's why the dollar strengthens.
Okay, and that, so I guess based on what you're saying, the dollar may even continue to strengthen further.
Yeah, in my view, yes. It's a really high conviction bet of mine to be long dollar versus both sterling and euro, for example.
Wow. Okay. Well, that's interesting to hear. And there's so much talk of, and this is like more of the not so in the know people in currencies or in the markets, maybe, that just they would bash the dollar, say the dollar is going to lose its reserve status. And I just had a conversation with Brent Johnson over at Santiago Capital just recently about this. Is the dollar even at risk of losing its reserve status? And if so, who would, in your view, who would replace it? I mean, if there is any.
First of all, I think it's a very tricky story to trade, since the timing is so tricky. And to me, the time horizon on this reserve currency debate is much, much further out than a tradable horizon. So this is something that will happen over decades, not something that will happen over the next few quarters. But I do get the risk of the dollar losing its reserve status over let's say the next 20 years, because the US is losing its importance globally, which is important in this discussion. And the country that is gaining importance globally is China. So if you look at simple trade data between countries, then I guess 20 years ago, the US was the biggest trade partner for more or less every country worldwide, while it's upside down now. China is the biggest trade partner for 80% of countries worldwide. And when that happens, it obviously makes increasing sense to start settling trade in yuan instead of dollars, slowly but surely. This is a process that will take time, but why not settle commodities in yuan if China is the biggest economy in 20 years from now? I think that makes sense over the long-term horizon.
Sure. But would you agree with me then on this, that China needs to take a lot more steps to really gain the trust of the global markets, because there is no depth, or very little depth as far as liquidity goes, whether you're talking about the currency itself, it's managed, and it's bond markets and whatnot. So there's a lot of work China needs to do in order to make that happen over the next 20 years. Wouldn't you agree?
Yeah, sure. I mean, we are very, very far from that scenario still. Just take the Evergrande situation right now. Once again, China has given the middle finger to international investors. That's obviously not something that you should do on a regular basis if you want your currency to be the reserve currency of the world. So, I mean,
well, with that being said, I guess the day that you and I'm not sure your take on this, but the day that you and I actually trust the data that's coming out of China, maybe that'll be the day that we lose the reserve status, right? So you talked a little bit about the euro you're bearish the euro, which I couldn't agree with you more. I think the technical setup looks great, and I think there's all sorts of things Europe's got to do. But I want to ask you this: what do you think about the euro as a single currency? Is it still an experiment, or is it more than that? Is it real? And how do you feel longer term about the euro as it stands?
I expect to live longer than the euro. Let me put it like that.
Wow. Okay.
So before I die, let's put it like that. Then the euro will end. And I think the issue is that, structurally speaking, we are simply not culturally uniform enough to have a common currency in Europe. That's the main issue, because you simply need direct transfers from the northern part of Europe to the southern part of Europe on a regular basis for this to function. And you can already see that the UK had enough of it, even though they were not part of the single currency. But you can also see other parts of Europe having enough of it over the next, 3-4 decades. It's still not a story for the short term. But obviously it's very, very tricky to ask the population in Northern Europe to pay for a population that they don't feel sort of culturally uniform with. I think that's tricky. Yeah.
Well, maybe you guys will just form an American football team as Europe, and then maybe you guys get unity there, right? Just joking. Okay. Last, I know it's getting late there in Copenhagen when you're at, and I want to thank you again for spending your time with us. And by the way, for those of you listening in right now, watching this video on YouTube, make sure you subscribe to the Traders Summit channel so you don't miss any of our great content. Give us a thumbs up, especially for Andreas spending some time with us. But last topic I'd like to bring up to you, and I know this is a tricky one for certain people, and you're probably going to offend some people and probably make some other people happy, but how do you feel about the rise of crypto? I mean, it's really been woven into I say woven into the fabric of Wall Street and financial institutions. They have another asset to sell, if you will. But how do you feel about the rise of crypto and what the future might bring with the crypto world, if you will?
I think that there is a rising probability that at some point in the future we will enter into some kind of Bitcoin standard. And I think that's the essential reason behind Bitcoin rising alongside inflation. So in that sense, I understand the price development. I don't really buy into a scenario in which crypto will become a transaction currency in any means, but it could become a reserve asset. And I think that's the main reason why people like the product right now. I don't see a lot of people selling the story that crypto will end up as transaction currencies anymore. But that was the initial argument
Sure.
But we're moving towards the argument that the probability of some kind of crypto standard is on the rise.
You know, it's interesting that you say that. I with kids that are in their teens and going into adulthood now that actually trade on Robinhood accounts. They're like, why do you own gold? Why would you own gold? I can just buy some crypto as a inflation hedge or whatever the case may be. So maybe that is more of a common thread amongst the next generation of young adults and investors that are coming up.
Yeah, I think that's a perfect way to put it.
All right. Well, Andreas, I want to say thank you so much for spending your time with me. I know it's very valuable to you, and it's very valuable to us that you have. And I hope that maybe at the beginning of this next year or the end of the year of this year, can invite you back and get your views into 2022 if you're available.
Let's do that, Blake.
All right, Andreas, thank you so much for joining us. And traders, remember, if you like this content, give us a thumbs up on YouTube, subscribe to our channel, and thank you again. I'm a big fan. I'll be reading your content every week.
Thank you.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.